In this video, we are going to discuss the budgeting process as well as two specific budgets, the sales budget and the schedule of expected cash collections. Before we actually jump into the calculations, let's talk a little bit about budgeting and why companies do it. Companies will prepare budgets to help them predict what is going to occur in the next foreseeable period. Sometimes they'll budget for a year, sometimes a month, sometimes a quarter, but whatever it is, they're trying to project what's going to happen based on reasonable expectations and past performance. This will then kind of give a company a heads up as to how much cash they may need to borrow in certain periods, whether or not they need to try to increase their sales through some aggressive marketing, as well as to alert them to other things that they need to plan for. Let's take a look at the problem that we're going to work through in this video. It's our in-class example found in your syllabus. In addition to this example, you will have a You Try It example. That one will have solutions posted so that if you want to go through and do the budgeting for that to see if you understand it, you will be able to, and you can compare your answers against the solutions. If you have any questions on that one, you can always post in the Mutual Help forum on the discussion board. It provides an additional chance for you to practice budgeting before you do it for the large project that you are going to turn in for me. Let's look at the data and put together a sales budget. The purpose of a sales budget is to help us predict our sales in dollars. It's a very simple setup. All we will do is take our budgeted sales in units, multiply it by our selling price per unit, and that should give us our total sales in dollars. Let me make sure that I've formatted my column for dollars, and I'm going to take the change out of that. As you can see, this one isn't very complex. You can also see that I've already formatted my budget and got it set up so that we don't have to take time to do that in our video. However, all of you should have at least the minimum Excel skills to be able to do this formatting, and when you submit your project to me, it should look like my format. Let's take a look at the data from our in-class example to prepare the sales budget. The problem says that you have just been hired as a management trainee by Cravat Sales Company, a nationwide distributor of a designer's silk ties. The company has an exclusive franchise on the distribution of the ties, and sales have grown so rapidly over the last few years that it has become necessary to add members to the management team. You have been given the responsibility of planning and budgeting. Your first assignment is to prepare a master budget for the next 3 months, starting on April 1st. You are anxious to make a favorable impression on the president and have assembled the information below. So if we're going to prepare a master budget for the next 3 months starting April 1st, when we look at our budget, we need a column for April, May, and June. And then 3 months constitutes a quarter, so we're going to have a summary column over here called the quarter column. Now when you're preparing a budget, you're going to have a bunch of information thrown at you. You're going to have to read through all of the information and be able to pick out the pieces that you need for the various budgets. In this particular budget, we need the budgeted sales in units and the selling price per unit. So as we read through, there are some things that I can skip over. The company desires a minimum ending cash balance each month of $10,000. Doesn't affect this budget. The ties are sold to retailers for $8 each, and then it says recent and forecasted sales in units are as follows. Well, we know that the selling price is $8, and so I can plug that in. It's going to be $8 in April, May, and June, and then we're going to talk about the quarter here in just a second. Then we look at our forecasted sales, and we're trying to figure out what's going on over the next 3 months. So our forecasted sales for April are $30,000, May $35,000, and June $60,000. Oops, I'm missing a 0. Then we just multiply. I want you to notice that I input data where a raw input was needed, where we couldn't get the number any other way. So for the budgeted sales in units, I had to do hard inputs. And for the selling price per unit, I did hard inputs because we don't have anywhere else that we're getting that data. However, when you come to a cell where the number is going to be the result of a calculation of other information given on the budget, I expect it to be in calculation format on your project, and I will be looking for this. So you see that I multiplied 30,000 times 8. I didn't just hard input that number, and the system is doing it for me. I'm going to copy that formula across because I'm going to do the same thing for all of my columns. Now when we come over to the quarter column, it's important that I stress that this is a summary of what's going on. This does not mean that I am necessarily just going to add all of my numbers across from all 3 months, because that would not lead us to the right number. What the quarter column should be, if you can visualize this, is taking all 3 periods that you're reporting on, in this case April, May, and June, and squishing them all together and aggregating the results and being able to look at the quarter as a big overview of what's going on in total. So for example, when we look at the budgeted sales in units, we do add all 3 of these columns together because we anticipate that we're going to sell 30,000 units in April, then another 35,000 units in May, and finally another 60,000 units in June. So I can sum these columns, and I believe for the entire quarter I'm going to sell 125,000 units. However, it would not be appropriate to sum the selling price per unit across, because if I did that, what I would be reporting for the quarter is that my selling price per unit was $24. I didn't sell any of my units for $24. I sold them for the same 8 that I sold them for in each of the months. So I'll put 8 in there, and when I do and multiply that by 125, I come out with $1 million in sales. You should be able to check this number 2 ways. You should be able to do the regular math functions that are required in that column to get here, and in that case it's multiplying 125 by 8, or you should be able to get to this number by adding across. So if you sum April, May, and June together, if you look down here in Excel, in this little bottom part, see where it says sum? It will sum any cells that you've highlighted, and that's kind of a quick way to do some math, and that $1 million should match the $1 million that you have there. And we've completed the sales budget. Yay, that was pretty easy. Now we're going to take a look at the schedule of expected cash collections, because the sales budget tells us when we're going to sell the items. It doesn't tell us when we're going to get the money in for them, and we need to be able to anticipate when that money's coming in so that we can prepare another budget later on called the cash budget. So now we're going to look at our schedule of expected cash collections. This budget is going to tell us when we actually collect in the sales that we make. Now notice the setup is fairly similar to the sales budget in that our columns are identical. We have a column for April, May, June, and the quarter. And then the rows over at the side represent the periods that we made the sales. So what we're going to do is to look at this budget kind of like a grid, and we're going to match up the rows with the columns. The columns represent when we expect to collect the cash. The rows represent when we made the sale. So for example, if I pick a row at random here, May sales, we're going to come across and we're going to indicate how much of May sales were actually collected in April, May, and June, and then how much in total of May sales we collected during the quarter in question. Let's go in and take a look at the problem so we know how it is that we collect the money from the sales that we make to our customers. I'm going to skip down just a little bit. I'm going to skip this small paragraph, and I'm going to come to the paragraph that says purchases are paid for as follows. Now please note I'm not actually using this line. Purchases refer to purchases that we make from our vendors to get our inventory. This represents money that we owe to somebody else. I want to find the sales data, the data that represents when our customers pay us, and the sales that we make to our customers. The second sentence in this paragraph tells me what I need to know. All sales are on credit with no discount and payable within 15 days. The company has found, however, that only 25% of a month's sales are collected by month end. An additional 50% is collected in the following month, and the remaining 25% is collected in the second month following sale. Bad debts have been negligible. The problem mentions bad debts because that's our heads up that we don't need to reduce any of our sales for bad debts. We can anticipate that we're going to collect 100% of our sales. And it looks like we're going to collect it 25% in the month that we sell it, 50% in the next month, 25% in the month after that. So when we come back here, we are going to match up our sales. I'm going to skip over the accounts receivable beginning balance for now, and I'm going to start with April because this row represents the collection of this number, $240,000. So when I come down here, my April sales collected in the month of sale, which would be April, is 25%. So I will take my sales and multiply it by 25%. This tells me that of April sales, I collected 60,000 of them in April. Just like before, as I mentioned, if you have a number that flows from anything else in the budget, it needs to be put into a formula. So I don't want to see any hard inputs in these cells other than the percentages. The total sales amount that's being used in the calculation should be a cell reference. So you can see where I linked up to that and multiplied it by 25%. Now I'm going to do the same thing for May. So the month after sale for April is May, right? April, May, June. And I'm going to collect 50% of April's sales in May. So this cell multiplied by 50%. So I collected another $120,000 of April sales in May. Finally, I'm going to collect my last piece in June, the second month after sale. So $240,000 times 25%, $60,000. Then we go through and do May. Well, for May sales, I didn't collect any of it in April because that would be the month before sale. And the problem says I don't start collecting in my payments until the month of sale. So 0 goes in the May sales collected in April column. Then we look at May sales collected in May. 25% of May sales would have been collected in May. So equals this time the $280,000 times 25%. And then May sales collected in June, or the month after sale, would be 50%. So I click on that cell, multiply it by 50%. There you go. Now notice, I still have 25% remaining, but I run out of room. You don't put it in the quarter column because the quarter column is a summary. So what happens to that? Well, it's going to be collected in July. July isn't part of this quarter. July is part of the third quarter. And what happens is that goes and it sets in the account as an account receivable. It's collected next quarter, and so those collections will show up on next quarter's schedule of expected cash collections. We won't see it here. Then we go into June. None of June sales were collected in April. That would be a prepayment. Nor were they collected in May. But we did have a portion of June sales collected in June, and that's 25%. So we come up here to June, multiply it by 25%, and we collected $120,000. Again, we have part of June sales which were not collected in this quarter. Again, it's okay. It goes and it sets in accounts receivable, and we collect it in next quarter. So you remember I told you I was skipping over my accounts receivable beginning balance, and that's because I wanted to explain that concept of what happens to the money that we don't collect in this quarter. It gets collected in the next quarter. Well, just like we're collecting in part of May and June sales in the third quarter, we're going to collect part of the first quarter sales here in the second quarter, and we need to account for that. Now what I'm going to do is I'm going to make an extra couple of columns to make my life easier. And then I have to figure out what my sales were in the past and which months I need to worry about. Well, it looks like we collect our sales over 3 months. So let's backtrack. The month before April was March. We would then collect March over March, April, and May. So I do need to worry about March. The month before March was February. We would collect that over February, March, and April. April's part of the quarter we're looking at, so we need to worry about February as well. Then backtracking one more month, January. January would be collected over January, February, and March. So it is all collected by the end of the first quarter. We don't need to worry about January. We only need to look at February and March. Well, when we go into the problem, we come back up to the schedule of recent and forecasted sales, and we can see the sales numbers for February and March. February was 20,000 and March was 22,000. There are a couple of different ways that you can do this. You can do this as a hard input, and I'm going to make a column for February sales and March sales. So what I could do is I could say, okay, in February I sold 20,000 units, in March I sold 22,000, and I could say, okay, February is collected in February, March, and April, or another way of looking at that would be Feb, March, April, and actually putting some months to it, figuring out what percentages go with what month of collection. I know that I'm only collecting part of February's sales this quarter, 25% of them. This is not my sales number. So I could either create an additional column here for February, that looks kind of like this. And let the spreadsheet multiply that for me and do it up here in a sales budget, and then pull that number over here or since the budget didn't actually ask us to go through and do the calculation for February, I could also take the information that I know, which is February sales of 20,000 units times $8 per unit times my 25%. It should get me to the same answer. Again, I would be okay with you putting those numbers into the formula directly rather than pulling them from the cell that they flow from, because we weren't required to prepare that information for February. So I'm going to do it that way and leave it there. And then I'm going to take a look at March sales. Well, March sales would have been collected over the course of March, April, and May. So we don't need to worry about the March sales collected in March, but we do need to worry about the March sales collected in April. We know that we had March sales of 22,000 times $8 times 50%. And we also collected some of March's sales in May, 22,000 units, times $8 times 25% this time. Alright, now we have filled in all of the data that we need. The only thing we have left to do is to summarize. The great thing about the quarter column and the total collections rows is that they are simple sums. You're going to add across, you're going to add down. Now some people like to hit each individual cell when they summarize. I like to sum all 3 columns across because then that way I know I don't miss anything. And once I do that, I take my cursor and I put it in the bottom right hand corner of the cell until it turns into a little black plus. I left click and hold that down, and then I scroll down and it will automatically sum those for me. I don't have to keep entering my formulas. Then when I come over here for April, I'm going to sum this column, and again, even if I have zeros in place, I just sum the whole column, because that way I don't accidentally miss anything or get a formula wrong. And then again, to make things easier, I just copy that formula and I click on all the cells I want to copy it into while holding down the Control key. Then I right click and hit paste. It's going to paste my formula, but it's going to update the columns. So you see here where I entered my original formula, I summed column E. Because I moved the column over to column G, it also moved the formula over to reference column G. And so it does that all the way across. You can double check to make sure your number is right here by summing it down, which is what this column does, and by summing it across. Again, just highlight these three numbers and look down at the bottom, and if it matches, it should be right. Now that we have our budget completed, let's talk about what these numbers mean. When we look at the column, we can tell how much cash we expect to collect in any given month listed. In April, we expect to collect in $188,000 from sales, May $234,000, and in June we're going to get $320,000 in from sales. And again, this represents the cash actually collected, not the sales made. One other thing that I want to do is I want to make the format consistent, because I'm noticing that I don't have everything that's dollars listed in dollars. So if I want everything that should be dollars, both on this budget and the prior one, to be dollars, I'm going to highlight them, click my dollar sign, and then I want to get rid of the change, so I'll click over twice on this one where it's got the little over arrow and it makes your 2 zeros go down to 1 0. That's indicating it's taking away decimal places, and it will take out those. Or if I don't care if I have dollar signs, and most of the time in an accounting firm you're not going to see dollar signs all over the place unless you're doing a formal presentation, I can get rid of those dollar signs just by highlighting everything that I want to get rid of the dollar signs on, clicking the comma, and then again getting rid of the change, because it will automatically insert 2 decimal places. Now my format is uniform and it looks very nice. This ends the video for the sales budget and the schedule of expected cash collections. If you have any questions, please post on the discussion board, and please watch for additional videos for the other budgets.